Hi everyone, my name is Simon Misiewicz from Optimised Accountants, and in this video we're going to be talking about limited company and corporation tax rates for 2024 and beyond. So let's get into the details here. So we are of course going to be talking about the tax rates. So what is a corporation tax liability? And as it says here, UK corporation tax is a tax imposed on the profits of companies, public corporations and other entities operating within the United Kingdom. It applies to both domestic and foreign companies within UK operations, covering income, capital gains and certifiable chargeable gains. So basically, if you make a profit, you will be taxed at the corporation tax rates. And here they are. This is the corporation tax rates, and these may be slightly different to what you're used to. And that's because they were changed in 2023. Use that QR code to get a tax consultation booked. But corporation tax rates is 19% for profits below £50,000. Once you go to £50,000 to £250,000, then you have this different rate of 26.5%, which is an arbitrary figure because it's calculated in a very, very strange way. And therefore, it comes out that slither between 50,000 and 250,000 actually comes out at 26.5%. And as I've indicated, it's an extra 7.5% more than you used to, which is £15,000, which is a lot of money. Then you get to £250,000. As soon as you hit that £250,000, you are instantly going to be hit with a 25% corporation tax. You can forget the 19%, you can forget the 26.5%, it's straight in at the 25% tax burden, which is a total nightmare because that is 6% more than the old 19%. So the UK really is not very competitive now when it comes to corporation tax rates. And what is corporation tax? What are you going to be based on? And as I want to give you a quick illustration, you've got sales, purchases, overheads, then profits. Well, corporation tax is charged on the profits. It's not charged on sales. So you can offset all the costs to get to derive at a profit, and then that profit is subject to corporation tax. There is a bigger problem here, which you may or may not come across very often, and that is aimed at those who have got plenty of limited companies. Not just one limited company, but they may have several limited companies that is active and trading. And it doesn't matter how big that company is either. So what are associated companies? UK corporation tax considers profits of associated companies when determining the tax rate, preventing businesses from splitting profits to qualify for a lower small company rate. What does that really mean? Well, it's quite difficult to explain it, so I'm going to give you an example. So let's have a look at another situation whereby someone's got 5 companies, and this is going to hurt you quite a lot. So you may have 5 companies because you've got multiple limited companies, because you've got trade businesses, property businesses. I know there are a lot of accountants out there that's advised in the past to have a rental property inside of each limited company, but for many reasons, and I don't believe in those reasons. I have to be as honest with you. I think it's just there to line their pockets. But they have got big problems now coming to them. And the reason for that is because the 19% tax band goes from £50,000 to just 10. So as soon as you go over 10,000, you're going to go from 19% tax band to 26.5%. In addition, you might be looking at this and saying, well, the 25% tax band hits me now when I exceed £50,000. That's not a lot of profit, to be fair, before you start hitting the 25% tax band in that company. So these are going to hurt. So my honest tip here is to close down the companies you really don't need and amalgamate some of the entities, or just stop doing those activities altogether. So this is just an example of this. Multiple companies, you believe it's like the 19% company tax rate, but actually you've got company A, company B, company C. My view is that you've got to look at those companies and see if they're viable in terms of the future. And whether you get rid of the companies, you amalgamate the activities, you just need to get some tax advice to help you with that. How to reduce corporation tax? I mean, that's the other side to this problem, is you've got to reduce the profits that you have. And one of the ways you could do that is to take wages out of the company. Of course, that then means you've got income tax issues to think about, but it can be one way to help you reduce profits. Invest your money in pensions. I mean, pensions is a good option for many, especially get to later years and you realize you don't have a pension pot at all. So you might want to put in quite a bit of money from your limited company into your pension pot. And that's because it will help you to retire more comfortably, but it will also be outside your inheritance tax. So this in pension investments will help you to reduce corporation tax and inheritance tax at the same time. Here I've just put in refurbishment costs, new or existing properties. Ultimately, you might be doing some work on a property to maintain it and you get more rental income. So it might be a good idea if you've got substantial profits in a year to do a maintenance project to reduce your profits, which then reduces your corporation tax liability.